morning. It is Friday, April 12th, 2024. This is Option Pit Live. I am Mark Sebastian, your only option. I am the founder of OptionPit.com. We are a full-service options education and financial publishing firm. We are traders who teach. Let's dig in today's show. We're going to talk about all of the earnings that have just hit. We're going to do a little data review and week in review. I'm going to give you a little talk on VIX and UVXY and what has just happened. Then we'll dig into our stock of the week, share some stocks we like. Then, if we're lucky, we'll get to take a ride on Andrew's trading vehicle. And if we have time, I'll share a little bit of order flow. But with that, let's dig in. As I stated, it's Friday the 12th. Pretty interesting week so far. To say we've had some volatility would be a pretty big understatement over the last 6 trading days. The market on Thursday the 4th had a huge move down, then rallied hard. I was dead wrong last week when I said I think we end up red. But then we had just a lot of chop, a big ugly day on Wednesday because CPI was really hot. And then a partial rebound on Thursday because PPI was not that hot. What I found interesting is, and we almost did it yesterday. The S&P 500 has not traded below its 21-day moving average since January 4th and 5th. 2 days in a row. It has not traded below the 21 2 days in a row since January 4th and 5th. It has not traded for multiple days below the 21-day moving average since October. So this run has been pretty. What that means, that doesn't mean that this run has been nonsensical or doesn't matter or anything. But what it means is it's been very consistent. You'll notice we just, we rally and then we get a tiny bit of a dip, maybe touch the 21, and then we begin rallying again. Rally, maybe a little bit of a dip, touch the 21, and then back to rallying. This is the first time since January where we've had multiple occurrences over the course of several days below the 21-day moving average. And that tells me that we may be in a period of transition. So let's now take a look and see what's happening with the banks. JP Morgan earnings are out. JPM is currently down 2.7%, call it $5.25. Now, the market was looking for about a 3.4% move. So right now, JP Morgan has not moved as much as the market was expecting, but it is down. That tells me that we maybe could see a little bit of a follow through. Maybe we get a little bit of a push. JP Morgan beat earnings, but they didn't beat as good as the market was looking for. Meanwhile, on the other hand, Citigroup, they did have they're up today, up about 83 cents. They reported pretty positive earnings. And Wells Fargo, everyone's favorite underperforming bank, they reported this morning it's currently down 3 cents. So all in all, Citigroup and Wells Fargo matter a lot less to markets than JP Morgan. And the JP Morgan earnings a little disappointing so far. And that's kind of the basics of what we're looking at. So, one more time, looking at my screen, I want to take a look at SPX real fast, and then we're going to talk VIX and UVXY and what's just happened. So we have had this since really December, this really consistent pattern in the market. So this top area of my screen, this area, this is the S&P 500. The bottom portion is implied volatility on the S&P 500. And I want to draw you a trend line. And you tell me if you see the same thing I see. I'll do that. What do you see in implied volatility that I see? Folks, let me know. I'll circle back and explain what this is here in a few minutes, but you know, I want your thoughts on what I'm looking at. So let me know. All right. So I'm going to bring Andrew here in a minute, but I want to talk about VIX and UVXY. Now, I had a lot of people tweeting at me or leaving, leaving comments saying, whoa, 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 why is UVXY $35.34? It was just $7. Did implied volatility explode? You know, I got that question a lot. And the answer is no. UVXY reverse split 5-for-1. So instead of owning 5 shares at $7 a share, I would now own 1 share at $35. And the reason for that move is because the product, as it gets lower and lower in price, it becomes very difficult to trade and take advantage of. And so ProShares, the manager of UVXY, whenever it gets below typically $8, they announce a reverse split. It'll be 5-for-1. It'll be 10-for-1. Now, normally when a stock reverse splits, that is its death knell. With an ETF like UVXY, it is not, but it is just a sign of kind of how bad UVXY is in terms of a long-term buy and hold, right? UVXY should never, ever be bought and held. All right. It's lost since inception. Looks, if you want to share my screen, this is the chart of UVXY since inception. Folks, people, when I show them this chart, they're like, where's the vol pop from COVID? It's in there. It is in there. It is just you can't see it because this thing has destroyed so much wealth. But us understanding this, when I see UVXY reverse split, I get excited, right? Because I understand why that chart happens. 2, I see that chart and I know there's a pattern there, right? This thing just continuously heads towards 0. And then 3, UVXY just went from $7 to $35. So at $35 now, if I know this thing continually loses money, I now have an opportunity to put on a trade. Now, if you're watching this today at 11 a.m. Eastern time, Andrew, who I'm about to bring on, and myself are going to be putting on a UVXY trade. I'm personally going to put $1,000 into the trade in the account that I'm going to show everybody, but across several of the other accounts that I manage, I'm probably going to end up putting between $15,000 and $30,000 into this trade. Andrew's going to be on with me. I'm assuming Andrew's going to do some of this himself. I'll let him answer that. But I'm going to put $1,000 in this trade, and I'm not going to touch it. I'm going to look at it once a day, but I'm not going to touch it. I'm not going to adjust it. I'm not going to do anything. And my expectation would be in 6 to 10 weeks, I will have a 100% return on my money. So I'll put in 1,000 and I'm going to take out 2,000. And I am putting on this trade on today, April 12th at 11 a.m. Eastern time. If you want to join me or have interest, reach out to my team, 888-872-3301, or give us an email, support@optionpit.com. Wave Rider wants to know, how much margin does it take? Well, if I put $1,000 into a trade, my margin, if I'm not using portfolio margin, if I'm just using Reg T or a cash account, margin is going to be $1,000. All right. So now, before I bring on Andrew, or actually, let's bring on Andrew. Andrew, why don't you pop on? Welcome.
Good to be here. Good to be here.
I just got done looking at SPX and showing everybody the pattern I was watching, and I think a bunch of people noticed it. They said, you know what? It looks like it broke above the trend line, which it did. It has higher lows and higher highs. That's correct. A possible breakout, Alan Dietrich says. And that is correct. So that is the pattern I'm seeing. Whether it holds true is a different story. But what I would say, Andrew, and I want to rope you in on this, since last Thursday when we had that crazy reversal, right? We're up 4 and we closed down 60. The market does feel a little different to me than how it felt basically the whole year. That's kind of what I'm seeing in this market. There seems to be an increase in uncertainty in intraday and intraday volatility, and the market seems a little bit less directionless, a little more directionless. What's your current take on the overall market? And then I want to hear your reaction to JP Morgan.
I would say that was a weird day because it wasn't clear what drove the sell-off. What was surprising was how fast the rug got pulled from where we were. Like, we were cruising at all-time highs basically, and then no. So I couldn't tell if it was, algos just smashing everything because of, because remember Blinken saying Ukraine was going to be part of NATO. I thought that could have been algo driven, like sell, because the Russians, nuclear war, So that, I feel like that lingers, but it's not doing much. And now we need some earnings to happen. The inflation news from the last week, unless you're like dead from the neck up, how could you expect any rate cuts this summer? I don't get it. Like, so now all of a sudden, or, whatever they were eating, rate cut news is gone. So what has to propel us to new highs? I mean, I think we need earnings now. JP Morgan, they were, they expect the sun, the moon, and the stars, even though it outperformed. It's like every single Friday where we sit here and the market is down. Like, VIX is up 1.5 points with SPY down 0.5%.
I know.
So it's like, are they going into the weekend again because they're worried about some kind of nonsense, only to just crash the vol on Monday?
JP Morgan earnings. JP Morgan earnings kind of remind me of a 16-year-old kid getting the wrong color car from their parents for their birthday. That's what their earnings were like. It was like, I wanted the blue car. That's kind of what, because the earnings were really good, but they just weren't, there was so much expectation, I think, already built in that it's getting some selling.
Well, I mean, again, you're looking VIX. We were almost looking at the 14 handle yesterday.
Mm-hmm.
It got very close. Might have scraped, but not quite. VIX is up 1.5 points pre-market.
Yeah.
On what? that the JP Morgan earnings were good, but not good enough to make the stock go higher.
You know, while you and I have been talking, futures have really fallen off. At the top of the show, we were only down about 18. We're now down 35. Interestingly, the bond market is actually getting a little bit of a rally today. The NDX, NASDAQ 100 is down 0.8%. Yeah, and S&P futures are down 0.2%, and you're getting that big of a move in VIX. This is the first time I've seen some real fear in this, like some real fear but without a move is the weird part, right? But there is definitely some fear built in here.
Right. And you can look at if we look at like VIX option prices, they are all, what I would call reasonable, given where we are. I mean, I was buying 20 calls for kind of insurance yesterday for $1.10 in May. It's just that from a VVIX, like vol perspective, that's not very much. You're not.
VVIX is the VIX. So the VIX is an index on the price of S&P options. VVIX is the VIX of VIX. So it tells you how expensive it is to buy VIX options.
Yeah, and I mean, if you pull up a chart of that, Mark, I thought you had a pretty good observation there from kind of where the market got messed up last week. If you put up a chart of VVIX,
yeah, here's VVIX.
It's never, the vol has, and again, because we had that little bit of a sell-off, we had the inflation stuff, but that is not weird. Vol has not gotten back to that pre-number yet, like not even close. So you want, to be more bullish, I would say you want to see traders become a little more bold and start smacking volatility in VIX, and it's not happening yet.
No.
So as much as I think every one of these dips get bought until they don't, because that's what's been happening in 2024, it's troubling that they can't smash the vol back down. I mean, that's still 10 points up in May is a pretty big number. And you're right. Like volatility was ready to go to the floor last week.
Yeah.
And everybody's like, everything's cool. And then all of a sudden whatever came out of that, either I think the inflation expectation, whatever the Fed says from a market point of view, it totally turned for this summer.
Yeah, I think the Fed has kind of shifted and is now maybe starting to tell the truth that there's no June rate cut and no July. What's crazy is the CME Fed Watch tool still has a 25% chance of a rate cut in June. It's pricing in over a 54% chance of a rate cut in July. And September, which is not going to happen either, folks, is up at 75%. And December is a virtual certainty, over 90%. And maybe we get a cut in December or before December, maybe. But
it's madness.
Yeah, there is not going to be a June rate cut. There will not be a July rate cut. And there will not be a September rate cut. My take is there won't be a rate cut this year. If I'm wrong, there will be one.
I agree. You can't when the government's spending so much money. I don't.
Well, if you look under the hood, right? Inflation was hot. And it's coming back. Housing's starting to pick up again. So it's not just the stuff the Fed likes to throw out like food and energy, but housing costs are starting to pick up. Healthcare costs, a lot of stuff is starting to run higher.
Yeah, we have a good comment in here from Seder Sinner. I'll just call him or her Seder right now. Yeah, oil is ripping, gold is ripping. That's going to be one of our topics here. And VIX is ripping.
I think it's impending Iran-Israel escalation. I don't think that's what is doing it. Now, obviously, that will cause volatility to go up, and war is terrible. Nobody wants war. But I think what you're looking at is more related to earnings fear. We built up I mean, the market is pricing in a forward earnings multiple on this thing. So does everyone here know what price earnings ratio is? That's how much a stock is priced over how much it earns per share. Pretty simple. Pretty simple.
I was going to say, I know what it is, but then you already would say, I know what you know.
We know you know what it is. That's why you're on the show. If you didn't know what it So but what this market is really pricing in, if you look at PE's price earnings ratios, typically in the S&P 500, traditionally it hung out between 15 and 20. I think the price earnings ratio of the S&P right now is into the low 20s, getting on 25. And some of the major players have really high price earnings ratio. You know, the biggest stocks, the three biggest stocks in the S&P 500 are Microsoft, which has a price earnings ratio. Microsoft, the largest company in the world, has a price earnings ratio of 39. The largest company in the world should typically have a price earnings ratio of about 15. All right. Now, Apple, the second largest company in the world, 27. NVIDIA, the third largest company in the world, 76. You've got Google with the Google twins. It is the fourth largest company in the world. It's got a PE of 30. Meta, PE of 34, and Amazon, PE of 65. Did I miss anybody there?
I think that's enough. I think your point is your point.
It's just Dave says
it's just a number.
Yeah. So now the reason why these are high is because the market is pricing in not the current PE, which is a trailing 12 month, but the forward PE. The expectations is that AI is going to drive these earnings so high that those PEs will fall to a normal level because there's going to be such a big increase in earnings. What if that doesn't happen at the rate the market is expecting?
Well, I think we'll have an idea this cycle, right? That's 2 weeks away.
Yeah. All right. So Andrew, I think we I was going to ask you about Apple and China tariffs, but I think our market talk has kind of been better than kind of the main topics I wanted to hit on. Did you have any thoughts on the Apple move yesterday? It was pretty bananas.
It was, well, I mean, the sentiment has been really bad on all that. So I again, in my head, I think Apple is still going to have a slow grind lower in PE multiple because they've got no AI game, nothing like that. So it's still a huge company and they're going to sell a zillion phones, but unless they really can come up with some kind of growth, I just don't see it. So I think it's kind of a fadeable rally, to be honest.
All right. And then Tesla's getting a little bit of a move because there's now rumors swirling that we might slap tariffs on Chinese EVs.
Oh, is there even a Chinese EV in the U.S.?
Not yet. I think there is.
Right.
I think there is. But, they don't want BYD, doing to U.S. cars what the steel industry the Chinese steel tried to do.
Right. Well, we'll see again how that goes. But I mean, Tesla's the only one that makes money making cars, to be honest. And I think really there'll be like a robotics.
You're not lying.
Yeah, right. And they'll end up being a robotics company. Or I don't even know. The hardest thing with Tesla is what do they own? They have so many technology.
Yeah, I mean,
things going on.
My neighbor was thinking about getting one, and the problem is the Texas power grid I wouldn't trust it. So I told him, from my opinion, if I was going to get especially living in Texas, we get 280 days of sun a year. Like, we're one of the places where solar actually makes sense. I told him, I was like, I would get a Tesla, but I would only get a Tesla if I was going to get solar installed on my roof and have my own battery, because I don't trust the grid. And and also, if you're actually environmentally conscious, getting solar with your electric vehicle is the only way that actually is kind of net green. Because folks, do you know how much coal we burn here in Texas? Do you know how much coal you burn in Pennsylvania and in Ohio and Indiana?
Or in Maine, in my house?
Or in Maine? Well, yes. Andrew's got his Tesla connected to an old coal stove from like the Bugs Bunny cartoons. Yeah. No, I mean, if you live in an area where you're getting heavy coal power, you're basically, instead of a gasoline powered engine, you've got a coal powered engine.
So right now, I would say, if we're looking at, if we're going back to like VIX right now is as high as it was yesterday or the day before when everybody was freaked out.
Yeah.
So,
and
something is going on that is not necessarily market related, I feel.
Yeah, markets are now, while we've been talking, markets have further deteriorated. We're down 40. So I'm very interested in what is next and where we head. Speaking of heading places and coal-powered car, there is a car that is powered by an old lump of coal, you might say. It is Andrew's trading vehicle. In this section of the show, I am gonna take a back seat, and Andrew is going to give us a ride on ye old Model T that is Andrew's trading vehicle, or maybe it's a Ferrari today. I don't know. Or a Honda CR-V. We'll see.
Hello, let me just get this squared away. So what I'm doing today is is I'm going to talk about when I want to buy a call or a call spread. So right now, the stock I'm looking at is Newmont Mining. If you want, Max, you can put that up on screen so people can see it. So it basically is kind of flattish for the last, I don't know, 3 months, 6 months, something like that. But gold has been kind of moving off the hook. So I own some Newmont shares. I have a position on it in OP mentoring for my students. We have a little collar thing going on over some stock. If you could show the next slide. What I think is most interesting is, like, a lot of times the market forgets stocks. A lot of retail paper has gone to NVIDIA, to SMCI, to Tesla, not so much this year because it's underperforming, or gold, GLD. And the dollars kind of pile in there. Oh, okay. Here's some news that somebody cited by news in Saudi Arabia. Estimates in the United States indicate that Iranian attack on Israel will occur today. That's enough for the VIX to go high. Interesting. Like, interesting. So that's enough to get vol going straight up to the moon, by the way. Just FYI for everybody. That's why VIX is up so much, and I think SPY is down, but not a lot. So it's a lot of uncertainty. Anyway, but if we get back to our gold, the miners are underperforming the metal. Normally, that's got to kind of get itself fixed somehow. So when I'm looking for whether I want to buy a call or a call spread, right? So I got call or call spread. And one thing I'm looking for is I want some momentum, number one, up, which I think we have. But I also want to take a look at what the call skew looks like. So anytime I set up a trade, I'm always trying to look for something for nothing. Gus just said, Microsoft Copilot just flagged me for censorship for just reading the news. Anyway, so what does something for nothing mean? That means you have some kind of a volatility edge. So if we go to the next slide, Max. So what you're going to notice here is, and there's tons of buying buy paper in NEM. And what that does is you can look on the chart, you can see like when I circled it there, the volatility of the 45 calls are relatively high to the 40s. And what that means is if you buy a call spread with very high volatility on the upper strike, you're going to be able to hold the call spread for much less decay than normal. So when you have a call spread with high positive skew, okay, your decay rate is much less. Less than normal. All right. So that's what I see here. I would rather buy call spreads, which I'm going to do today and kind of jack up my position a little bit because the stock's been going up. I'm going to buy call spreads instead of calls because I can back into those, the 40-45 call spreads or even the 40-47.5s for relatively low dollars. And NEM has been moving like in $1, like $1 to $1.50 every 1 to 2 days. So getting into that call spread for just about $1.25 and selling $7 worth of upside and taking the position down to almost theta neutral for the next week, you basically get a free, you still have the delta 100%, but you don't have the decay problem that you normally would have with the option. So you're starting to position at a slightly better spot than you normally would. So anyway, so my trading vehicle today would be, I would take call spreads over calls in the minors. They're moving up. They're just not moving up as hard as gold is. So as a trade, I would prefer the call spread over the call. And that would be my trading vehicle for today. So again, I'm already long NEM. I'm going to add a little bit more. And again, we'll see what happens. And that is my trading vehicle for today. And now
Andrew,
I think Mark and I are going to look at some
amazing ride. It's always the best. Well, we got a little bit of time here, and what I want to do today, normally we would do our stock of the week, and Leisha, who is out on vacation, would be judge, jury, and executioner. Since she is out, we need a judge, jury, and executioner. We're going to have you guys be our judge, jury, and executioner on our stock of the week. So after Andrew and I make our pitch, I want all of you to tell us whether you think you like Andrew's take or my take. And this week, we're looking at Cameco Corporation, CCJ. Now, CCJ is trading up to this morning. It's trading $50.93. It is just below an all-time high. Implied volatility in CCJ is exploding higher. Andrew, I'm going to let you do I know you want to be the bull. I'm going to let you be the bull, and I'll take the bear.
Really?
You're
going to let me be the bull?
I'm going to let you be the bull. You be the bull, Andrew.
Okay. All right. Again, so this is a stock that is uniquely poised for one, nuclear power. They also bought Westinghouse's assets so they can build nuclear power plants. And I do believe that it does trade at a pretty rich multiple. I do own shares of this. Mark and I have talked about this for what? We were buying it in the 20s or something like that. Mm-hmm. Still own it. I still think it is there are very few nuclear power companies that can build plants and supply uranium, and Cameco is one of those. So anyway, I think this stock, again, goes higher in the longer term. I like sort of like longer term calls in this one. It can move around. So like kind of longer term call, maybe a junk put or something if you want to hedge the call or have a stop on the call. But I think it's the way to trade this particular stock. There you go. Vol not cheap though. Definitely not cheap going into earnings.
I listen, uranium is the future. But my question is the future already priced in? Cameco has a price earnings multiple of about 83. You're basically making a bet that nuclear power, which has been is just starting to become unfazed in the United States and worldwide, is going to become potentially the primary source of power in the U.S. and Canada over the next 5 to 10 years. If that happens, then Cameco's underpriced. If it doesn't happen, look at the run this thing has had in the last 6 months. It was $37. It's up to 50. The 1 year run, it's up over 100%. If I bought it in the 25s, would I be selling it? No. Would I be jumping in to buy it here at 50? No, I'd be waiting for it to get back into the 40s, which I do think it will come to. So, but if it trades back into the 40s, I think that's your step in. But trading at an all-time high, I think I go out to I don't want to own it here, but would I sell the Jan 2025 37 put at $2? Yes, I would. That I would do. But I don't think it's a great own here. What do you guys think? Do you want to dive in with both hands, or is it time to call it a day in Cameco? Give us your answer. We'll reveal the audience results here right at the end of the show. Andrew, we got about 5 minutes here. What are you looking at in terms of trading today? We do have this geopolitical news heating up. JP Morgan's position has softened further. It's now down 3.5%, trading down at 188.65. What is your take on the market into the weekend?
I think I would like to be able to dump the VIX calls I bought yesterday. So
nice purchase.
If there's an opportunity, I'll have I'll tell my students, get your offers out, get your GTC orders ready to go, get them in there, because you might have one shot if things go parabolic. So just and see how the day plays out. I think now that this news is out, or apparently what kind of news, we could see some movement. So, it would be a good profit taking day, like weekly profit cycles. We own some put spreads. I'm kicking myself for not selling the calls I owned yesterday, but we got a lot of time left on those. So there is, I think there's opportunity, but at least at this point, when you have vol up like this, we need to see some kind of announcement to sort of calm things down. And I don't know whether we get it today, Saturday, or Sunday. So once the geopolitical thing heats up, it's madness. So I'm kind of like, on a Friday, normally I would say, yeah, they're going to buy the dip. But today, if everybody's freaking out, I don't know. We could actually have a red Friday.
Yeah, S&P futures are sitting just below 5,200. The low for S&P futures was on the 10th. Nope. It was we actually hit a low on yesterday of 5173.5. Watch to see if we can break that level. That's another $25 lower than here. But trading below 5,200, the VIX is skyrocketing. VIX futures are up to about 1605. And when I look at my VIX futures term structure, not only is the VIX at 1693. It's trading above April. It's trading above June. It's almost in line. It's trading above April. It's trading above May. It's almost in line with June. So there is
little fear today. It's more than yesterday.
A lot of fear. All right, so let's circle back and see what our jury of the jury of our peers, our audience, thinks of CCJ. Let's see.
They like your idea.
Captain J says, wait for pullback. Doug says, wait for pullback. Dave says, CCJ going up by calls. So he likes you. Michael says, energy hungry nation. So bullish. He's with you. And Larry says, CCJ, wait for a pullback. Michael says CCJ has been above the 50-day moving average since September. So we got a pretty mixed bag of people saying, you know what, it's going to continue to go higher. And we've got another group of people saying, you know what, Mark, maybe you're right. Maybe wait a little bit. I like my idea of the 37 puts at $2. That's
I think that's a pretty good idea.
That's Mark's trading vehicle this week.
That's if I had to do something today, I'd probably do that. But
CCJ forming a cup and handle. That is bullish. All right. Yeah, it's been above that forever. Yeah, my take, geopolitical risks tend to get faded, is what I would say. Yeah. I came in today short. I will be closing those in the first 10 minutes of the day. And then I'm going to kind of reevaluate things. Again, for the first time in a while, I think there is some real risk of the market dipping to the 50-day moving average. And so I think over the next couple of days, it's bearish. Vernon says, CCJ, good for lunch. Oh, wait, that's PB&J. Hilarious. Hilarious, Vernon. You win the comment of the week. Goes to Vernon Griffin.
He wins YouTube today for us.
Exactly. Way to go. All right, everybody. Again, if you want to join me and Andrew on that UVXY trade that he and I are going to be putting on in approximately 2 hours, shoot my team an email, support@optionpit.com, or call us 888-872-3301 to join us. But otherwise, Andrew and I cannot wait to see you next Friday. We're here every Friday at 8:30 a.m. Eastern time. With Leisha. Leisha will be back next week. I know you all miss her and her charting wizardry. So for Andrew T. Giovinazzi, the Viking of volatility, the Vicar of Vol, I am Mark Sebastian, your only option. And this was Option Pit Live. Have a great Friday, everyone.
Have a good day, everybody. Have a good weekend. Pray for...
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.